Good morning, one and all, and welcome to this morning's video. So I apologize in advance if my mixer cuts out. My mixer cuts out again. I believe it cut out yesterday during the video. I'm having some problems with that at the minute. It seems to just turn itself off during these videos, and then obviously my videos end up recording my voice through my laptop, which is obviously not as good. But anyway, I have two pairs on watch today, and those are Kiwi yen and pound dollar. My favorite of the bunch is Kiwi yen at the minute. And just to say that I am in a trade on this pair at the minute, and I shall break that down for you in a second. Break the trade down when we get to it. And just to say, if you were wondering, if you've been watching my videos for a long time, you may be used to seeing when I am in a trade, you may be used to seeing a little blue or a little red circle next to the pair that I have in my main focus list here on the right. Okay, the reason you're not seeing that in a minute, if you're thinking, no, you haven't placed a trade, there's no red circle there. Okay, the reason that's the case now is because I'm not trading. When I used to trade personal capital, I used to trade my personal capital. I used to trade it. I had it synced up to TradingView. Okay, so when I placed a trade through my personal account, it would show up as a red or a blue circle in my main focus list because it was all connected. Now I'm a funded trader. I'm actually I can't. I tried to sync my broker up, my funded trading account, the broker up to TradingView, but there's no option to do that. So the broker that I'm using now via my funded account is actually separate to TradingView, and that's why you're not seeing a little red or a little blue circle next to Kiwi yen, even though I am actually in a trade on it. Just thought I'd clear that up. But anyway, Kiwi yen on the higher time frames, we have this high here. I've broken this down many times now, but we have the high there. It's important to do top-down analysis. We have the high there, we have the near miss to it, and then eventually we come back up, we tap into the high break above, and then push to the downside, okay? So there's not any reason at this moment in time for us to come back up to here. Okay, we then have what looked to me just a bit like profit taking. So we had the impulse down, we have the correction, which we anticipate. It's a healthy, if you just discount this as volatility, then this is a kind of healthy pullback relative to the move down which has preceded it. And now this looks like just further. It's a bit of a strange sequence because you don't usually get within these corrections. You don't usually get an impulse up followed by a correction and then an impulse down and then a correction and then it drops out. But sometimes these things happen. But overall, what I'm looking at is just simply an impulse correction continuation. And within that now that we've dropped out of all of this consolidation, an impulse correction and a continuation to push lower. And if we are discounting this as a volatility wick, which we could do, because if we switch to the line chart, we can't actually see it, then that means that this is the low and we have a near miss to it. And these near misses often get filled. And even if we do see that, take that into consideration, that then gives us a near miss to all of this volume here. Okay, we even have a near miss here to here, so this is increasing the likelihood of this playing out to the downside. Once we drill down to the daily chart, we can see that we have a reversal structure into that. We then get the impulse correction continuation. We drop out. We then leave a footprint here after we broke out of all of this. Okay, previously I was saying that we could come back up to retest this. We could still do that. However, we have wicked above. The thing to note here is we have all these near misses. We have a near miss and another near miss to this area of consolidation, which will be slightly clearer as I drill down. And we wick above it. We don't just wick to it, we wick through it. Okay. And then we have this close yesterday. It would have been better if this was a bearish close, this high test, but it's not about perfection. We're just looking for the confluences to be stacked in our favor. What we do have, and what I do really like, is we have this, this is a weighted lower time frame. Okay, so we have this, look at this candle here, this 4-hour rejection. We have a solid bodied 4-hour rejection with no wick below it. And then we have this next candle, which follows through almost with no wick below it as well. And how do we get to that area? We get to this area of consolidation here, okay, by way of a reversal structure, giving us an indication that that is the area of value, okay? So yesterday I did say that we could push a bit higher just because of various factors that I mentioned within that video. Okay, but we've just reacted from the area, and the clue was the 1, 2, 3 into that area, the near misses. Okay, so as I said yesterday, it's not about being right. I said that we could push down from the area, but we could go a bit higher. And all I was waiting for the market to do, if you remember, is I said I was waiting for it to show its hand. Well, it has shown its hand because we've got the impulse down followed by the correction. Okay, and if we just, so the trade, so I forecasted this. Okay, entry minimum entry requirements if 2-touch 1 hour continuation forms 15-minute risk entry within it. Okay, so we have the high there. Okay, we're high up in the run. We have this high here. We come back in, we tap into it, and then I got short just because the 15-minute was just a, this wasn't I wasn't convinced by these rejections here. I just wanted a little bit more weight. Okay, so what I was looking for is this. So I waited for this 1 hour candle to close just before I made this video. And then I got short after that 1 hour close. And this is actually, these are actually my exact entry. No, that's actually been moved. That's the forecast, isn't it? Right, this is actually the exact. So that was the forecast. This is the exact entry. So I've got my stop loss exactly there. My entry just underneath the close of the body of this candle. Okay, one of the things that I've noticed from my data and that I was taught to do is if you put your entry literally at the close, what happens a lot of the time is you get tagged in, tagged out. You'll save yourself a lot of losses. This is a key detail here, which I advise you to. You might think to yourself, "Oh, I want a tighter stop loss. I'll have it here. I'll have it on the close." And it is easier to set the order doing it that way because you could simply set a market order. It's a little less fiddly, but you will get tagged in a lot of times and then tagged out like that. Whereas if you just put it where I have, just below the close of the candle, you'll save yourself a lot of losses. So don't try and be greedy and just get an extra tight stop loss. That's what the amateurs are doing. Put your entry just below the close of the candle rather than at the close in these instances, and you'll save yourself a lot of losses. So this is the exact entry. Okay, exact entry price, exact stop loss. I set a take profit. So I have a take profit set here. So I've measured this range. So from the high, the area of value, try that again. I measured from here to here, and I set my profit and my take profit literally not exactly at the 90%, but at this low here, because the 90% area is where price can pull back deeply, even if it's going to continue going. And when I measured that, that gave me a profit target of 5.95%. So what I'm going to be doing today is I'm going to be, if it just smashes to the downside and hits the take profit, great. I don't need to do very much, but I'll be trailing my stop loss in the meantime until we get to that area, if we get to the area. And if we just measure this, okay. So if we just measure this, so, and we assume that the continuation leg, so if we get an impulse correction continuation, the continuation leg out is often of a similar length, and we measure it from there, that would take us down to there. But we also know that the volume that's been generated within the correction can dictate how far we go. So if we measure it from the break, so from the break of the structure being there, that would actually take us down to about that area anyway. Okay, so that makes mathematical and contextual sense as well. We have down to all of the start of this consolidation, we have about 2.5-3% to work with. So I'm just going to see how that goes. And regardless of the outcome of that trade, I will bring you the outcome in a trade recap. I'll mention how this is going tomorrow or how it went. So that is Kiwi Yen. I'm not really looking for anything else now that I'm in the trade. I'm not really looking for consolidations under here, because if we got a consolidation here, my risk would not be off of the table on this, because I want to give this a little bit of room to breathe. So that would require it to be further down. I wouldn't really want to be trading. If I was trading anything down here, it would be a 1 hour consolidation, which would likely not be ready until tomorrow. So that is Kiwi Yen. So pound dollar. So pound dollar is, if we just zoom out, so on the higher time frames we have this area of significance here. You might think, well, how is that significant? Well, it's significant because we had all of this consolidation, and then this was the footprint that was left after this. This was the origin. After we broke out of all of this, we left a little footprint, which was the origin of this massive move here, giving me a clue that there's likely a lot of liquidity there. Okay, the other clue was the fact that we near missed to it. Okay, we had the near miss to it. We also near missed to it again here, trap the sellers in too early. They get washed out. We've finally tap into the area, break above as we usually do on the high time frames if we're going to move to the downside, and then the aggression starts. Okay, what I like about this, although we are quite far into the run per se, relative to this move. So in terms of this move here, we're quite far into the run. What have we done? We've near missed to this low. So it's likely that that will be taken out. Okay. And if we just drill down and unpack the story still further, we can see that we have these, there's a little consolidation there, which is visible on the 4 hour. We near miss to that. We tap in, move to the downside, impulse correction continuation, impulse correction continuation. Look at this. This is about candlestick wise, this is about as good as it gets in terms of bearish candlestick closes. High test candle with a massive body with no wick below it at all. And then the next question I ask myself is, well, did we tap into anything significant? And if we just unpack this story, you can see here that, so we have this, I'm interested in this move. So we have that little footprint there. Near miss, we finally tap into it. Bit of a strange start to a move to the downside, but then we break to the downside with aggression. We come back up, retest the back end of that. We move to the downside, retest the back end of this. We then come to the downside, retest the back end of this. Then we get this little footprint there. Okay, we near miss to it. We near miss to it again, or ever so slightly tap into it. Then we wick above, move to the downside, leave a footprint. We get this V shape. What do? We near miss to it, tap in, impulse to the downside. So now I'm looking for a correction afterwards, which will enable me to get short. Okay. Now, so we've had the 4 hour momentum to the downside, bit of a wick below it, and another one there, but we followed through. Okay. What we have here, so what I'm interested in here is the fact that this looks a little bit underdeveloped to me. So even if we look at this on the 15-minute, we have quite a lot of consolidation here. We have quite a lot of volume there. Okay. And this, if you just look at this, I'm literally just analyzing this on the fly. Okay. We've actually gapped to even that area there. So this is giving me a clue that this is, especially with those 4 hour candle closes, where we've had wick below it. Wouldn't be surprised if we get this kind of the same sort of thing as I was looking for on Kiwi yen. So what I'm looking for is something like this. Okay. I'm looking for just because that looks how it's looks like how it might be forming as well. If we do get this, some kind of something like that, we tap into that and we get the 3 touch into that hook point. I'm just going to let the market do its thing because it's not clear to me at the moment. We may just sell off from here. If we just sell off from there, then I'm not bothered. I'll just let this go. But I'll be looking for something like this: a 3 touch 1 hour continuation, or a 2 touch 1 hour continuation with a 3 touch structural approach. And then I would have about 3.8 to that low to work with, depending on just to say if we actually if we got a risk entry within the structure, okay, which would give me a tighter stop loss, I would actually set the take profit there. But if we just get the reduced risk entry, then I would target the higher time frame low, which I was just talking about, that one there. It all depends on the risk to reward. Okay, so I don't set a take profit unless I can get a 5-to-1 on it. That's just my rules. So I'm just going to be monitoring this, and what I'm going to do on the fly is let's just look at this again. Yeah, I'm literally just going to set an alert there to see if we come back up to tap into this high and to see what the market does afterwards. Okay, so that is pound dollar, and that's what I'm going to be looking for today, folks. We shall see what happens with Kiwi yen. Win, loss, or break even, I don't care. Okay, I'm sticking to my rules. I'm sticking to what I've been taught to do, and then we'll see what the market wants to do. So that is what I'm looking for today, folks, and that is the trade that I'm in. Have a great day, and I'll see you again in the next video. Thanks for watching.